Welcome to the security analysis portfolio management class on fundamental analysis session. Fundamental analysis, meaning and its components. So first we have to know what is a fundamental analysis. Fundamental analysis is in the stock market is a method of evaluating a company and determining the intrinsic value of its stock. Companies are valued as though they were unlisted with no regard for their market prices. Buy and sell decisions are then made based on whether a stock is trading at a discount or a premium to its fair value. Although a stock's value is ultimately an relatively undervalued companies can outperform over the long term. Fundamental analysis can also be applied to other markets, including currencies and commodities. In that case, any factors that affect the value of the asset are considered. In accounting and finance, fundamental analysis is a method of assessing the intrinsic value of a security by analyzing various macroeconomic and microeconomic factors. The ultimate goal of fundamental analysis is to quantify the intrinsic value of a security. The intrinsic value can then be fundamental analysis aims to determine the correct price or true value of a security. By knowing the right price, an investor can make an informed investment decision. A security can be overvalued, undervalued, or fairly valued. Components of fundamental analysis. It consists of three main parts. One is economic analysis, industry analysis, and company analysis. Fundamental analysis is an extremely comprehensive approach that requires a deep knowledge of accounting, finance, and economics. For instance, fundamental analysis requires the ability to read financial statements, an understanding of macroeconomic factors, and knowledge of valuation techniques. It primarily relies on public data such as companies' historical earnings and profit margins to project future growth. It can be either top-down or bottom-down. An investor who follows the top-down approach starts the analysis with the consideration of the health of the overall company economy. By analyzing various macroeconomic factors such as interest rates, inflation, and GDP levels, an investor tries to determine the overall direction of the economy and identifies the industries and sectors of the economy offering the best investment opportunities. Afterwards, the investor assesses specific prospectus and potential opportunities within the identified industries and sectors. Finally, they analyze and select individual stocks within the most promising industries. Bottom approach and top-down approach has been projected here. So bottom-up approach is first we will be doing economic analysis, and then we will be doing, first we will be doing firm analysis, and then we will be doing industry analysis, then we will be doing economic analysis. And in top-down approach, first we will be doing economic analysis, then industry analysis, then we will be analyzing the firms whichever falling under that particular industry. The macroeconomic factors controlling to economic analysis are as follows: growth rate of GDP, savings and investment, industry growth rate, price level and inflation, interest rate, that means the market interest rate, the tax structure, balance of payment, foreign exchange reserves, and exchange rate. So these are the major elements that decides the, or we have to find out these items to make an economic analysis in the market. Then industry analysis. It is a type of investment research that begins by focusing on the status of an industry or an industrial sector. A form of fundamental analysis involving the process of making investment decisions based on the different stages an industry is at during given point of time. The type of position taken will depend on firm specific characteristics as well as where the industry is at in its life cycle. Industrial life cycle analysis. Many industrial economists believe that the development of almost every industry may be analyzed in terms of the following stages. First one is pioneering stage, then rapid growth stage, maturity and stabilization stage, and decline stage. So this is the small graphic representation on the industry analysis model. Then company analysis. It is a process carried out by the investors to evaluate securities, collecting info related to the company's profile, products, and services, as well as profitability. It is also referred as fundamental analysis. The company analysis incorporates basic info about the company like the mission, statement, and the apparition and the goals and values. During the process of company analysis, an investor also considers the company's history, focusing on events which have contributed in shaping the company. The following are the steps involved in company analysis. First one, we have to identify the company and industry's economic characteristic. Then second one is identify and know about the products or services rendered by the company. Third one is understanding the risks and concerns about the company. Fourth one is analyzing the financial statements. The following are the types of fundamental analysis tools. First one is earnings per share or EPS, then price to earnings, PE ratio, return on equity, price to book PB ratio, beta rate, price to sales ratio, then dividend payout ratio. Thank you.